Today we're doing 4.28 from page 141. We've got a trial balance, we've given some additional information, and we've been asked to show the journal entries for the balance day adjustments, which is this information here, and clearing the GST accounts because we have collected and received amounts. Both those need to be cleared into GST Clearing. We need to show the ledger accounts that are affected from the above, so the balance day adjustments for advertising and office wages, and the GST Clearing, and prepare an income statement and a balance sheet using all of this information. So all of this has been copied over onto our Excel spreadsheet with our trial balance here. All the information has been copied over. We've got our journal format ready, our ledger with the accounts ready to go. The income statement is here ready to be made, and the balance sheet is also ready to be made. So we've got a list of tasks we need to complete here with a few hints, and we can get started. So the first step is to do the balance day adjustments. So this information here is our balance day adjustments. It's saying advertising of $200 was prepaid. So that's what it's saying, that the advertising must be wrong. As at 30th of June, our trial balance is incorrect for this. Our office wages must also be incorrect because we're going to adjust them now. So we need to go back and change these amounts after we've made our entries. So advertising of $200 was prepaid. It's prepaid, and advertising is an expense. So it's prepaid expense. And we know that we debit prepaid expense because it's an asset. And the opposing account will be advertising. Office wages of $800 are owing. So owing means accrued, and office wages are an expense. It's an accrued expense. Because it's an expense we've been accruing, it's credit, because we owe that money. So $800 there. And of course the opposing account is office wages, as we can see here. Fantastic. So we're ready to make our ledger entries now. We've done the journal entries for the balance day adjustments. So we're updating only the expense ledger accounts, the advertising and the office wages. Normally we would do prepaid expense, the asset account ledger, and accrued expense, the liability ledger account, but we're not going to worry about that in our ledger here. We'll assume it's somewhere, it's just invisible, we're just skipping that step. So advertising has been credited for $200, so we get our advertising credit for $200. Take our debits, minus any credits, and we get our new debit amount. And the other account was prepaid expense. The other side, we do office wages was debited for $800, so you get office wages debit $800. The new balance is any previous debits plus any new debits. We get our new debit balance. The other account was, of course, accrued expense. Next step, complete the journal entries and ledger entries for GST Clearing. So we've got our 3 GST accounts here. This is very much the same as our closing entries. So we want to close GST collected to clearing and close GST credits to clearing. So the opposing account for both of these will be clearing. So we just start, GST collected has a credit of $4,000. We want that to be 0. So we will debit GST collected for $4,000. And we'll close it to GST Clearing. Why? Because we want both amounts to be offset from each other in the one account, so we can get the total amount payable in one account rather than have it appear in 2 different accounts. We can already see here the credit amount is $4,000 and the debit amount is $2,000. As it's a liability, we know that the credits are larger than the debits. We will have a GST clearing total of $2,000. but we need to make sure we record this change in the journal, that flows through to the ledger, and then it will be reflected in the trial balance for our end of year statements. So the GST collected has been debited to clear out the credit. So we can debit GST collected for $4,000, which will leave us with a zero balance, and GST clearing. And GST clearing has been credited for $4,000. The opposing account is GST collected. Now we'll close GST credits received by crediting it to make it zero. So we'll credit GST credits received for $2,000. And debit GST clearing. So we'll credit GST credits received for $2,000. So GST credits received, credit for $2,000. And closing it to GST clearing, same as our journal entry. So GST clearing will be debited for $2,000. We'll take our old credit amount minus any debits, and we'll get our remaining credit balance. And the other account is GST credits received. Fantastic. The next step is complete the income statement. Hint, be sure to use the adjusted amount for advertising and office wages. Remember, we had changed these two. So what we'll do is we'll take the balance from our ledger accounts. Why? Because that's what we always do with our trial balance. Our trial balance should reflect all of the account balances, the amount in the bottom right, for every single account. This is a summary. So advertising is no longer 1,000, it's 800. And office wages is no longer 875, it's 1,675. They've stayed as a debit balance, but they've increased. So we'll increase those now by just saying this is now equal to this cell. And this is now equal to this cell. These are the new adjusted balances. So we can clear out that color so that we're ready to create our statements. And the GST clearing account has also given us our final amount. So we'll highlight this section so that we come back to it. And we'll highlight this section as well, so we come back to it. When we move on to our income statement, we always remember the format. If it's a trading entity, which this one is, it has sales, then we start sales less sales returns less cost of goods sold. And that will give us our gross profit, or the amount of money we make from selling the goods in our business. So all we have to do is copy over the amounts. So sales is 50,000, sales returns are 1,000, and cost of goods sold is 18,750. So we'll colour those in so we know we've completed them. We'll get a subtotal here. Sales less sales returns is 49,000, less our cost of goods sold gives us our gross profit. Our gross profit is 30,250. So we made $50,000, but after you take out the cost of all of the stuff that we sold, we only made 30,000. Now we have to remember this is just a gross profit. We don't yet have the net profit. It's only the cost of what we sold taken away from the total sales. We made other money and we had other expenses. So we call this section other revenue, if we had any other revenue, which we did. Because on the credit side, like revenues, we've got commission revenue, interest revenue, accounts payable are a liability, GST is separate, mortgage is a liability, capital is owner's equity. So we have these two accounts. So we've got commission revenue and interest revenue. Commission revenue of 2,000, interest revenue of 250. If we sum these two up, we've got our other revenue. We need to make sure this is add, because we are adding a revenue. We take another subtotal. So our gross profit plus our other revenue. So we'll tick these off that we've completed them. Those complete. And the next section will be less other expenses. So we'll go through and grab all of the expenses out. So we need all of the expenses which are here: advertising, travel, selling, office wages, stationery, insurance is an expense, electricity, telephone expenses. Cash is asset, accounts receivable is asset, inventories is asset, land, building, vehicle, all asset, accounts payable is liability, mortgage is liability, and these are owner's equity. So the expenses are all here. And it's got an error there because this cell is an equals of a different cell, so I'll just copy the values. Tick them off. Copy all of these expenses, paste. It's happened again. I'll just put values. That's just an Excel formatting because I put an equal sign in one of these. Okay, we grab our total of our other expenses and calculate our net profit by taking our gross profit plus other revenue less our other expenses will give us our net profit figure. Now we're ready to build our balance sheet. So the net profit is the amount the owner keeps. The owner's account is capital, and capital is part of owner's equity. So this number will travel over to the balance sheet. As we format our balance sheet, we remember that it's a visual representation of the accounting equation. So we've got our assets, then we take off our liabilities, and that'll equal our owner's equity. So we just take all the amounts from here. So we take all of our assets out of our trial balance. We've got cash, accounts receivable, inventories, land, and buildings are all of our assets. But also we can't forget, we made a balance day adjustment for advertising. It was a prepaid expense of 200, which we know is an asset account. So we need to include prepaid expense of 200. And then we can sum this amount to give us our total assets. The next step will be to minus our liabilities off. We can cross off these assets. Minus our liabilities off. So we've got accounts payable and mortgage. We've also got another balance day adjustment that was a liability account. We have the accrued expense, which was 800, because we have to pay that in the future, which is 800, and also the GST amount. So the GST, rather than being separate, is going to be one amount, GST clearing liability of 2,000. We can get our total liabilities. So lastly, we've got our net assets, which is just our assets minus our liabilities, our owner's equity portion, which is our capital from trial balance, the net profit from our income statement, and the drawings from our trial balance. So capital, add the net profit, less the drawings, gives us the owner's equity, which should equal the net assets.